Good morning, Wall Street winners. It is Monday, December 30th. Today is going to be the last trading day of 2024 that you can make a trade that will count for the 2024 tax year. Tomorrow is still a trading day, but you have a 1 day clearing or closing on equity trades. So that makes today the last day that you can sell an equity stock on the markets in the US or Canada and have that stock clear and be finished and completed in the 2024 calendar year. So it'll end up clearing tomorrow. So bear in mind if you want to take some tax losses or some profits for the 2024 year, today is the day to do that. Um, as we look at the markets and the futures, you can see that we're in the red across the board. It's not looking pretty. The markets all just started to tail off and take a dive in the last 30 minutes or so, and since about 7:30 a.m. Eastern. And you can see the Dow is off 0.64%, the S&P 500 off 0.76, and the Nasdaq is down 0.84. So looks like we're off to a rough start. I've been doing a lot of reading this past week on what we're in for in terms of 2025. Obviously, there's a lot of forecasts, and really at the end, the forecasts are simply guesses based on data points that are out there. So not one of them is more correct than another, but they're all just educated guesses. And if we look at the market today and kind of think about what's going on, I think what we're seeing is a bit of a year-end sell-off. There could be some people taking some tax losses or some profits and selling out, and that's causing there to be more sellers than buyers. But I think what we'll find is in the first couple of days of 2025, we'll probably see a bit of an uptick in the market and some positive um, and energy and some more forward thinking purchases and trades taking place from people, especially if it depends on obviously what the market does today. But if the market drops significantly, then I think you'll see a lot of buyers jump back in at that buying point. That said, I'm not necessarily encouraging you to do that, just saying be aware we're heading into some very, very turbulent times. We have the administration changing this month. Jimmy Carter, sadly, the 39th president of the US, sadly passed this weekend at 100, and they will be having a state funeral, I believe, on January 9th. And typically, US markets are closed on January 9th. This is a short week because January 1st is a holiday and the markets are closed on January 1st. So it's typically a slow week as well this week, but it usually starts to heat back up on the second. So we'll see what happens there. Um, and then we just have a couple of trading days and then we're into the weekend. So, looking at the futures, you can see that crude is up 26 cents. So it's staying above $70. So that's a good sign for crude. We want to see that continue to move up. But obviously, the new administration does not want to see that. They want to see the price of crude at the pump. They would love to see the price of crude for the barrel of oil at probably $85, but they'd like to see it at the pump at a buck 50. And it's very hard to do both of those and have the oil companies make any money. So we'll see what happens with crude, but I do expect that this year, going into 2025, we're going to see crude get up back into the 80 to $85 range. So we'll have to wait and see what happens there. The VIX is up this morning. So as the NASDAQ dropped, you can see the NASDAQ dropped here. In the early morning session, just after 7 o'clock and into 7:30, 7:40, it kept falling down. And as it continues to dive, the VIX is continuing to spike. So it's now gone from 16 or 15 to 18 now. And we're just going to have to wait and see what's going on and where the bottom is with the NASDAQ. So Good news is we have an hour and a half till the market opens. This could easily correct before then. It could find a bottom before then, or could continue to fall. Either way, we simply want to watch that NASDAQ and see where it ends its drop and starts to rebound, if it starts to rebound. And that might be an indication of a good time to make a purchase to one of the stocks you're following and like on the NASDAQ. And the same is true for the Dow and stocks on the Dow. So as we scroll through health and retail, you've got Costco. So here's a stock, and this goes back to the methodology here on the channel, where we want to encourage you to buy stocks when we feel there's value in them and they've fallen, and then sell them when they're at a peak and you've made some money. So take your profits. Costco was a stock that was trading in the 890 range within the last couple of months prior to earnings, and it climbed up into the low thousands, 1010-ish kind of range. And now after earnings, which were positive but not extraordinary, it has dropped down to the 940s, and it looks like it's going to be down into the low 930s today, based on where it's opening in the pre-market numbers. So there's an example of a stock that has moved $110 upwards in the course of a few months. And then in the same time, after it peaked in at the 100,000, sorry, the 1,010, it then dropped by $70 to this point. And it looks like it's going down another 8 to 10 today. So $80. So that's quite a bit of movement, call it 8 to 10% on the upside and the downside. And if you had a locked in your profits at that $1,010 mark, you would have been in great shape, had a nice 10, 11% profit, maybe 12%, depending on where you bought in and where you sold. And then you could have banked that and either put that money into another stock or just waited for Costco to come back down and buy it again at a deeper discount and then wait for it to go back up. Because again, if you believe that Costco is a great company, which I do, it will turn around and it will go back up. We just have to wait for the cycles to play out. And that's just how the stock market typically tends to work. So as we scroll down, we've got a lot of red on the screen here in health and retail. Your transport stocks, red as well right now. Oil, for the most part, is green in the pre-market because likely that crude is up and oil has had a really tough month or two in the markets, but it looks like it's going to make, excuse me, a small little rebound here this morning. And then we get into the tech sector. And you can see that most, if not all, the tech here is in the red. So today's the day where you want to find those stocks that are strong producers of revenue, profits, and cash, and have growing and gaining market share, and are leaders, and that are falling, and then wait for that bottom in the NASDAQ and potentially correspondingly in the stock itself, in the individual stock, and then make a purchase as you see that start to turn. Now, it may not turn today, so you may not make a purchase. Or you may feel that it's going to turn tomorrow, which is just really a best guess because no one knows what it's going to do tomorrow. Um, and lock in a price that you feel is a decent value for that stock, and then buy that stock and either buy and hold it for a period of time and sell it at a profit, or take your profits in the same day or next day if that stock pops percent or two, and that meets your criteria for when to sell based on your trading methodology. And so what I'm going to be looking at today is Meta as one example. Going to look at Meta, maybe watch that to see if it gets back down into the 590 range. And if it gets down into the 590, I'd look at acquiring some of that. Google, I was buying, selling on Friday, and I'm going to be watching to see if that gets down into the 192, 191 range, and I'll be buying that if it does, somewhere in there. And then I'm also going to be following TSM. TSM has been hovering in that 200 range, but if we see that drop down into the 190s, the low 190s, then I'd probably be looking to pick up some of the TSM there. SoFi as well. So SoFi down 62 cents. So that was a fairly sizable drop for SoFi on Friday. If this stock gets down into the 1550s, I think I'd probably look at picking up some of that because I think it'll get back into the mid 16s or high 16s. And then finally, the other one that I've got a lot of interest in these days is Goldman. I think the financials as a sector going into January, they may have a bit of a sell-off here today and tomorrow, but I think by the end of January, these stocks will have gone up 3 to 8%. So I think it could be a pretty exciting month with earnings coming up. If earnings come out and are positive, there's a lot of anticipation that earnings and expectations that earnings will be positive and that the future this year in 2025, with the potential for deregulation in the banking and investment sectors, thanks to the change in administration and the Republicans taking power of the Senate, Congress, and the White House, has a lot of positive impact for financials. So I'm definitely going to be watching financials as we head into January and into earnings. And JP Morgan will be the first to report in January, so we'll be keeping an eye on that. But I do like Goldman in the 570s, and it looks like it's going to be in the low 570s. So we'll be definitely keeping an eye on that and seeing what happens today. That's where we are today. I hope you've enjoyed this year. I've recorded over 400 and published over 400 videos this year. My goal was to do one a day. I missed a couple of days in the last week over the holiday, took some time off, but we'll be doing the same every trading day going forward in 2025. And if you have any comments or you'd like me to cover anything, drop me a note in the comments and let me know. I read those and try to respond to all of them. And if you like the channel and know someone that might be interested in learning about the market, share the channel with them and see. I would certainly appreciate that. See if they have some interest and we can help them to better understand how to manage their money. Good luck in your trades today. And again, hit the like and subscribe button. We'll talk to you again soon.